Morning, it's Friday, October 14th, 2022. It is 7:45 a.m. Eastern Time, and looking back on the trading plans for yesterday, I did do a mid-morning update and talked about a few things, but I didn't do a review of the entire day as things played out later on. So I'm here to do that this morning with fresh eyes, hopefully. And as you can see, looking at this chart, this is a market profile chart that's generally in ones, but scrunched down. It looks like this, which is quite noisy. But I'm not going to take these things off because the main things to pay attention to are just the profiles. The blue-purple ones are the overnight. But I want to point out a couple things that I'd mentioned in prior pre-market trading plan videos. One that didn't really like this high in the overnight. Had just a little bit of excess, but it was basically a weak poor high right here. I mentioned yesterday that we had a poor high. I actually mentioned the night before in the trade review, and then yesterday morning we had a poor high for Wednesday. And I didn't talk about this, but I don't really count this as having taken care of that in the Globex. Okay, that's still open. That's still a poor high in my opinion. It's still out there and doing what poor highs do, waiting for the general. Most times they get traded back through, right? It's just a matter of when. But we had two that we're building. We've got a lot of potential for short covering to the upside, and we had a real strong move down after the CPI numbers yesterday, and it was so far away, such a nice big size gap. I really the first step was to rotate within this newer volume distribution, or this what I was calling a spike, even though it wasn't in the regular trading hour sessions. It had those kind of characteristics, and looking for, this is going to be changed when we get above it. I did account for if we traded back into range, which we did, and I did think that it would be likely that we would rotate into range, but that's not what happened. We rocketed, we just blasted through it really, and we'll talk about that. But anyway, let's just get to it here. Let's see. I think let me just do something here. Okay, that's because they're from other charts. All right. Yeah. Well, I still have some lines on here that cleans it up a little bit. Don't need to use this right now anymore. This is just one where I could crunch it down so it was a little easier to see. Let's pull in the stories. So the first one was that we were gapped down greater than 10 points. Gosh, I think it was like 50, 70 points. I don't remember. It was a lot. It was one of those where the first thought is, oh, we're going to continue. But I don't generally feel like that. I feel like, especially when it was an emotional move like that, there's going to be some recovery. There's going to be some profit taking on the initial direction. So I did feel we would likely move towards the gap, but who knows if we would close it. So the gap down 10 points, the story would be that we'd rotate from the volume, and what I meant by that was down here, where we were trading at the time, where we opened, down in here. Rotate from the volume, and I don't remember now how fast this was, if this all happened in the first couple minutes or not, but yeah, we moved on up, and I know it didn't just go up, it went down and came up. But let's see here. Rotate from the volume to inflection points above. Fail to close or rejection of prior day's range. So it basically was saying that we were going to rotate from the volume to the inflection points above. Just move through those things, back and forth through them to the upside, and either not quite make it to the to the prior low of the day, or get to it, even come inside it and get rejected out of it. That was the story. Okay. Well, we did go right up, okay, but we closed it, and not only closed it, we got acceptance into the prior day's range. But the strategy to take advantage of this, to rotate within pre-market drive down, was the idea, again, when I drew that big circle. But Prairie dogged the overnight low for a move to rotate in the lower volume distribution or higher. Well, this really worked out. But the rotate part, it was a lot stronger move to the upside than I had accounted for in this little story. Nevertheless, had someone decided to take that move, and let's look at it. Here's the prairie dog, right? Now I never did. I had mentioned in the mid-morning update video, was going through a minute chart or a tick chart. I don't remember which one. And I said, oh yeah, I think I need to adjust that overnight low. Well, here it is. I never did adjust it. Let me just do that now. Actually, that's not the one I wanted to adjust. I wanted to adjust this one. So now I don't know where this prior low of day was here from 11,620, and I'm going to have to go back now and find it because, all right, well, anyway, there's the overnight low. We came through it 6 ticks. Came back through. This was your back end, all right? There were these little inflection points were places that possibly to trade against. If we, you have your moves, you have your retracements back, and they often stop on these on levels that you have on your charts, and you might trade against it, risking the low, that kind of thing. But in this kind of case, even though you could get shaken out really easily, just a back end could be just like as soon as it comes in, you go in on a stop order here or whatnot. Another thing is if you had an opening range area to go in on the top of the opening range when it cleared it, or go long when it comes back through the open. There's a lot of different ways to skin a cat here, right? And the point is, the dynamic being that we come outside of this move down, there's no continuation, we get rejection for further continuation, we come back into that range, and it basically is, in this case, it's 2 Ys. This area right here, and why I put some, I talked about it, all this volume is, you're looking at balance. This is where the more volume there is, the more two-sided trade there is. It's really just that simple. Okay, so this trade, let's say you got in, and this is important to do this because I did well yesterday, did really well. However, I didn't maximize the potential. I'd like to get more out of my trades. Why not? I didn't. I did great. I did really well, but gosh, look how well I could have done had I gotten gotten long and stayed long all day. Well, I don't know if it's all, there's some retracements, but if you look at this, now you might say, well, you talk about this and you go back and you look at these things and they play out, and why don't you stay around and trade all these stories and this and that? My friend, I didn't get into trading to get rich and be here all day and just strive after money. There's a lot more to life than money, and it's kind of like people who eat to live and people who live to eat. It's really just that simple. Now, I'm not aversive to making as much money as I can, but where I am right now, I just I have other things I'm involved with. I need to do. And why I got into trading initially was to what I did for a living, it allowed me to be self-starter and independent. I basically had my own business, and I got used to that, and it allowed me a lot of flexibility, and I wanted to continue that and be able to leverage my time for other pursuits. Trading is a skill, like fishing, like ironworking, whatever. It's a skill. It's just a skill, and I've developed this skill. And I have other things I'm interested in. Anyway, that's the point. Nobody's asking me that, but in case you're wondering, because when I see days like this, it's like you could just make so much money. If you hung in there, if you stuck around. Well, in general, the market is so volatile and back and forth, especially the last couple of years. I actually got very narrowly focused and taking a lot shorter trades, and I do not, even though it occasionally falls out of my mouth, I don't like the term scalping. It's just a lazy person's way of describing taking bites out of the market, which is completely respectable. Scalping was generally, as I understand it, people using arbitrage and profiting when they're on the floor, when they're just like hundreds and hundreds of trades a day, and they're profiting pennies or more per trade, but of course it adds up. That's scalping, you know, taking a little, just a skimming off the top of a transaction, where just because you only make 3 ticks or 2 points out of a trade, I don't see that as scalping. Sometimes it takes great skill to do that. In fact, sometimes it takes a lot more skill to do that, because you can't risk a lot if you're taking, you can, but it can bite you if you're not really, really good. Anyway, I'm kind of going on a sidetrack here. So, gosh, if somebody would have got long in that back end and held one position, 682 ticks. Good grief. Let's see how many points that is here. Let's see how many points that is here. Actually, I think I can do it this way. Be easy to do it. Show points. 170 points. 170 and a half points. Wowzers, right? Good grief. That's a lot. All right, so story number 1, just like the Beatles said, love is all you need. Story number 1 is all you need. That's right. All right, so gap down continuation. Didn't happen. We knew that right off the bat. Could cross this off and come back to it later. Close the gap. Close the gap. That happened. All right. So let's say you didn't get in until, you didn't do anything until it closed the gap. So, but the strategy was to get long against inflection points, one-time framing to the upside until gap close. I talked about this, about one-time framing entries. All right. So this worked out great. So we already talked about if you got long in the back end, but let's say you didn't and you waited to watch that gap being closed and deciding, yeah, it is closing the gap today. Okay, so let's go way back down here. Take a look at, I went back and I identified these inflection points, you know, and every one of these lines, and there's others that are not lines on the charts. There's edges of volume. There's other things that are not necessarily on the charts. And let's go back down here. Okay, A period comes up, huge buying tail. B period opens up, doesn't even come back to half back. All right, comes to the top of this volume edge. All right, we're not one-time framing yet, right? You need 3 30-minute periods to be technically one-time framing, but that's on a 30-minute scale. I did a video update on what about, you know, I specifically talked about, I brought in a 10-minute chart here, and let's scroll back. Right here you can see this is A period, B period, and I made the video right in here, and I said, you know what has happened this morning? Higher lows, double distribution. I called it a double distribution, but now we're on a third distribution. I don't have a volume profile here. It'd be easier to understand what I mean. You know, there's balance and two-sided trade here. Then it takes off again. Balances a bit for a little while, but we never stopped. We hadn't officially started one-time framing on the 30-minute. We stopped one-time framing on the 10-minute, but that doesn't mean that we're not setting up for one-time framing. I use the word term brewing. One-time framing brewing. So this was our early warning system that we might need to be looking for ways to get long. Now, what I want to point out to you, I said in the stories, get long against inflection points. All right. Look how nicely, if you wanted to, let's just look at these here. Okay. Here was a VPOC from 11:10:20. I put on the chart. Okay. Well, I've talked in other videos in the 10-minute that halfway is an inflection point, but then this is an inflection point. Of course, you could have gotten shaken out. Don't know what your stop is, but look here. Overnight low held first time. It came back through. This held on this retracement. I could set this up to where once I click and it won't. Here it worked again this time. You know, shorts worked against here. I don't know you want to be going short, but if you thought we were bouncing and rotating, but my point is, notice how that these really found they coincide with these inflection points. Here was a halfway mark, inflection point. Now, how do you know that you're going to, should I take this long here? You've got your own ways of looking at the market, your own feel, order flow, indicators. I don't know. You could just take a shot, you know, honestly. But now we resume to the upside, okay? And you can see how all of these things, you know, you can see how there's very exact sometimes, and what all these little shaded areas are. I mean, that's nothing secret. There's low volume areas. There's pivot zones. There's this, you know, these aren't all things that I'm gonna necessarily trade myself, but like they explain a lot of the moves a lot of times. Like, you know, somebody else is seeing them, somebody's trading against them. There's positions there where people are stuck or decide that's where I'm getting out, or that's where I'm back to break even, or that's my profit target. You know, all the reasons that people enter the market. Let's see here. Here was a spike base, and this D period came down. You know, we had another move up in a new distribution, right? And now we're above what it initially was support. So, again, these are just some ideas. Now, one thing I want to talk about next is the value area. Not sure if I mentioned that. No, I don't know that I mentioned that. Here, let me also cross this off. I want to make it clear that this whole thing is eliminated. This should have been just deleted. I didn't put. I'm not really putting these in because not everybody knows what they are. It's not that important. I did actually put in some conditions again. The last couple days, just the way of getting this done, it was I couldn't fill it in. All right, so re-enter prior day's range. So this is where we want to look at the 80% rule. Now, we had a very narrow, relatively speaking, used to be, by the way, years ago, the range from the value area high to value area low, which I'm calling narrow, used to be, could encapsulate a full day's range. So, very interesting. All right, re-enter prior day's range. Re-enter prior day's range and find acceptance. Get long against the prior low a day or other inflection points. That's kind of key, okay? So let's say you didn't take a trade at all until we got back into prior low a day, which is right up here, right here. So on the 10-minute, if you got long here, it only came against you once we came in. I really need to put the volume profiles back on this because that could show us a little bit more, and I don't recall why I took them off. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 2.5 points. So where would your risk be? Well, maybe below one of these things. Maybe that's a little bit steep for somebody, but maybe you let it shake out and then come back in again and get long then. That's sometimes. And also, if we were to look at a tick chart, which I'll pull in. So I mentioned yesterday that I'm all over the place with time frames, right? Now, tick is not necessarily time frame, but it often will show you a little bit more rotational stuff, depending on what setting you have, than a minute chart. And it can be very helpful. So let's see, we're in D period. So D period is going to be 11 p.m., or excuse me, 11 a.m. on. So let's see here. We come back into the prior low a day, and you can see, let's see here. Now, is this really showing me where we came back out? All right, so something's wrong here. Let me just back up here. We're in D, which is 11 a.m., and maybe I'm on the wrong day. No, I don't think so. Oh, I see. I was looking at the wrong thing for prior low of day, I think. It's right here. Okay. Yeah, okay, this will show some. Wait a minute. So I appreciate your time watching this video. If you're hanging in this long, you know, I'm taking my time this morning and just kind of going through this. All right, here we go. This is the prior low day right here, this blue line, okay? Came into it, came out of it, right? And somebody could have gotten long here, but we came back into it again on the tick chart. Look at that. That might have been, the back end. We came in and came out. So if somebody would have shorted here, they would have taken this much heat. But then when it came back in again, you had another opportunity for the retracement if they were just patient for a little bit. This trade would have been at 11.14 coming into the 15-minute bar. If somebody would have been impatient and took on the first retracement back to it and taken all this heat, that was at 11.10, the new 10-minute bar. So, gosh, again, sometimes, let's say you didn't risk very much, you just used a money stop. Well, the fact is sometimes, as I've said yesterday as well, sometimes you got to take a couple shots, to snag it, right? And there you go. So look at this trade, right? If you would have waited to get in on an inflection point, let's see here. Let's say you risk down here, and you got in, right in there, and you just took it up to, let's say you just took it up to the value area high. It's 48 ticks. 48 ticks. That's almost 10 points. I mean, it actually probably is 10 points because I'm short a little bit. It's 10 points. Up to the volume point of control, that's 91 ticks, right? 91 ticks. It's almost 20 points. And then it continues. So anyway, now I didn't account for going outside of the highs and short covering because I really, maybe I was short-sighted. We were such a big gap. I said, we will find balance. I really felt that if we had that big a move, that we were going to get maybe kind of a P-shape of balance back into yesterday's range, but I was wrong. We blasted through. But nevertheless, any one of these trades would have prepared you for that because they worked so well. You would have been definitely tuned into the long side, I would think. Look for exits and reloads, and that was anticipatory that you're going to get opportunities to continue, and that we might be one-time framing. And I guess I did have breakouts in here, but I wasn't thinking that. I really felt like we would balance. I thought we might get back to the high. We had a poor high, but I felt like we'd pretty much, if this was Wednesday's range, right? I thought once we came from way down here, we gapped way down here and came up to the low, that we'd start kind of rotating back and forth with the possible bit of a breakout above, and fall back in, which might be typical, but that's kind of what I envisioned. But looky here, kept going, so you can't underestimate a short covering rally, and but I didn't know we'd have one so strong. So fantastic, because there was opportunity to continue with that. But that was yesterday. This is how being prepared, planning the day can work. I will get back to, I used to sit in front of the machine from morning until afternoon, the close. Then at night, I'd be watching webinars and learning all I can and all this kind of stuff for a long time. And now it's like I'm like a fart in a bottle sometimes. I can't sit here that long because I've got other things to catch up getting taken care of. For a lot of years, I neglected other areas of my life. And, trading, if it's consuming your life, then you need to get that in check because it's hard to... time, especially as you're growing as a trader and learning as a trader, time waits for no one. Time passes, things change, things are going on all around you, and life is outside of this box, right? Life is outside of this box. So anyway, that's all I have to say. Kind of waxing a bit philosophical, which is fine, but make yourself a great day. I hopefully will be back with the pre-market shortly for today, Friday. I actually don't know that I'm going to be, well, I say this a lot, that I'm going to be here much at all today. It is Friday. So thank you very much, and thanks for watching. Make a great day.